Hello, this is Jordan. This video is being recorded on the morning of Thursday, October 20th, 2022. Thank you so much for joining me. In this video, I'm going to discuss another signal, a strong signal that we are beginning a secular bear market in stocks. And quickly, that signal is the fact that commodity prices have already broken out to a new all-time high. Now, obviously, they're correcting now. We're likely going to be going into a recession. There's probably going to be more downside in commodity prices. But even aside from that, if we're looking at the technicals here going back 60 years or so, it's clear that much like the stock market, commodity prices follow a pattern. And when they're breaking out and running to higher highs and new all-time highs, you have a secular bear market in stocks. And so commodity prices, spot commodity prices, they've already broken out to a new all-time high. And so this index is the Bloomberg Spot Commodity Price Index. This chart is from @MacroOps, by the way. Great free newsletter. So follow him on Twitter. That's MacroOps. Want to give him credit for this chart. I threw in a few annotations here, just some of the years. And first, as far as commodity prices, we have to look at indices like this and not indices like the CRB or the RJX or, all these indices that they show commodity prices, but the weightings of the index or the commodity basket are just they're just terrible and they don't reflect commodity prices. And then secondly, those indices, they include the cost of rolling over a contract and that sort of thing. So that makes makes commodity prices look weaker than what they really are. So I prefer commodity indices like this they're very balanced and they're just showing what the price of the commodity are doing. Because if you go back to the 2011 peak, if you look at many commodity indices, they show that commodities peaked in 2008 and not 2011. Yet, if you look at individual commodities, everything other than energy made a new high in 2011. So, and you can see that in this basket here. It peaked in 2011, not 2008, but there wasn't room for me to put the annotation there in 2011. But anyway, we can see here that as I already said, commodity prices have broken out. They've broken out to a new all-time high. And if we look at what happened the last two times that happened, look at the early 70s and the early 2000s. So you have a major low in 1968 that ran up to 1981. And then you had a major low in 1999 that ran up to 2011. And so those coincided with secular bear markets in stocks. So in what we can see here, commodities since the COVID low had a very significant move higher. They broke out to new all-time highs. So just this chart by itself, that's more evidence that we're in, or if we haven't already started, we're going into a secular commodity bull market and a secular bear market in stocks. Now, that doesn't mean that the stock market can't go up. If you look at the early 1970s or the early 2000s or, be it 1933 to 1937, there are periods in secular bear markets and stocks. These are cyclical periods where the stock market rises alongside commodities. But in those periods, those are the periods when commodity prices dramatically outperform. Gold stocks do really well. Energy stocks do really well. And looking at this chart here, I love charts like this that go back 100 years that are really actionable. And this shows the weighting of the energy and mining sectors within the S&P 500. So those are basically the commodity sectors. It might not cover 100% of all commodity stocks, but for the most part, if you look at energy and mining, that's going to give you a good reflection of the weight of commodity stocks in the larger S&P 500. So I noted here, the significant peaks were 1951, 1981. You also had a peak, based on this chart, I think it's showing 2008 or 2009. But the weighting in 2008 or 2009, that did not reach 20%. Whereas if you look at the weighting in 1951, that was close to 30%. 1981, that was over 30%, close to 35%. Excuse me. So look at this weighting after COVID. I mean, remember, energy stocks didn't recover right away. They took a little time. But the weighting after COVID in, call it the summer of 2020 or the middle of 2020, and the weighting was below 5%. We're looking at a 3 or 4% weighting. So this, if we factor in, and we can see here, look at the periods when the weighting of energy and mining have been increasing in the S&P 500. If we go back, I mean, you go back to 1999 or 2000 to 2009, you can see it there. If you go back, you can see it 1972 up to 1981. A little surprising that the weightings didn't increase in the 1960s. I mean, that's a little surprising to me, but that, I'd have to really get in here and look at the data in this. But go back to, the Great Depression years and a little bit after. I mean, the weighting from 1931, 32 up to 1951. Remember, that was a commodity bull market from 1933 to 1951. So this chart is a real significant. It's real significant evidence that commodity stocks are, historically very depressed relative to the market, and that they could run a really long way. Just flashing back here, if we take these two together, I mean, we can see it's very powerful evidence. So we're looking at this and seeing commodity prices have broken out, probably in a new secular bull market. And then you look at this, and that tells us that there's a lot of room for them to run. And this chart, gives further evidence that, the breakout here is probably going to be sustainable. So that's what I would look for in the next economic expansion, much like the expansion you had in the mid 1930s, the early 1970s, the early 2000s. Probably going to see gold stocks really outperform energy stocks, commodity stocks really outperform. And of course, I'm looking for precious metals they'll bottom well before that expansion begins and before the stock market bottoms. But circling back to the main point, I mean, this is, I've done a lot of work based on the stock market and secular trends and, looking at valuations and, expected forward returns, the money that's invested in stocks, household investment in stock. All these things argue that we could be going into a secular bear market for the stock market. And then you look at this information right here. That just provides further evidence that, we're in a new period. It's a secular bull market for commodities and a secular bear market for stocks. Let me know what you think. Leave a comment. Thank you guys for watching, and I'll talk to you again in the next video.